All right, let's dive into a real market mystery today. We're talking about a stock that, seemingly out of nowhere, just exploded over 300% in a single day. So we're going to break down exactly how that happened, and more importantly, what the clues tell us about where it could be headed next.
Okay, let's just start with the number at the heart of this whole thing. 321%. I mean, think about that. That's the incredible gain a little-known stock pulled off in one trading day, catching pretty much everyone completely off guard.
So this is the big question, isn't it? How on earth does that even happen? Well, it's a fascinating story about market dynamics, about extreme volatility, and really about the incredible power of a single piece of news. And the company right in the middle of this storm is PepGen Inc., ticker symbol PEPG.
Okay, so let's set the scene. Because to really appreciate the explosion, you first have to understand the dead calm that came right before it. This wasn't some gradual buildup. No, this was an absolute shockwave that hit the market.
I mean, just look at this. For the entire summer, this stock was basically asleep, just bouncing around in a tight little range, around $1, $1.40. Then, bam! September 25th hits, and it's like a rocket just ignited. The stock goes vertical, hits a high of over $6, and finishes the day up 321%. Just incredible.
So the natural question is, what in the world could cause a move like that? Well, the first and maybe the most important clue isn't actually in the price. It's in the number of shares that were flying around. It's all about the volume.
And this is where the story gets absolutely wild. On a typical day, maybe 3 million shares of PEP would trade hands. But on September 25th, over 125 million shares were traded. That's more than 40 times the normal activity. This wasn't just a few people getting interested. This was a market-wide stampede.
And that really brings us to a core principle of the market. A move this gigantic, on volume this insane, it never, ever happens in a vacuum. The market was screaming that it was reacting to a major catalyst, some piece of news that completely rewrote the story for this company, literally overnight.
All right, so let's shift gears and check on the stock's current condition. After a massive event like this, it's kind of like checking a patient's vital signs after a major shock. And we can do that by looking at a few key technical indicators to see what they're telling us about the stock's health right now.
But before we look at the numbers, we need to get our heads around one critical idea: overbought. And it's pretty much exactly what it sounds like. It means the stock has had so much buying so fast that its price has been stretched way beyond its normal range. The rubber band analogy is perfect. The more you stretch it, the higher the odds that it's going to snap back.
And whoa, this dashboard of vital signs is just flashing red all over the place. The Relative Strength Index, or RSI, it's sitting at 90.72. Now for perspective, anything over 70 is already considered overbought. So this is extreme. Then you have the Money Flow Index, which is at a staggering 99.32. All of these signs are telling us the exact same thing. The buying has been incredibly powerful, but this engine is running dangerously hot.
And to put this into perspective even more, just look at how far today's price has pulled away from its own history. The current price is almost $6, but its 50-day average is only $1.50. A gap that wide just tells you how extraordinary and maybe how unstable this whole situation has become.
So all this brings us to the million-dollar question: where could it possibly go from here? Now, when a stock is this volatile, you're not dealing in certainties, you're dealing in possibilities. And the analysis really points to 3 distinct paths it could take.
So let's quickly walk through what these 3 potential futures could look like. You've got the bullish path, where the rocket keeps on climbing. Then there's the neutral path, where it sort of finds a new orbit and chills out. And of course, the bearish path, where that overstretched rubber band we talked about finally snaps back.
Okay, first up, the bullish path. In this world, the stock actually breaks through its recent high of 634 and just keeps running. Now, this would almost certainly need another dose of good news to keep that momentum going, pushing it up towards those next big psychological levels, like $7 or even $8.
Next up, the neutral path. Here, the stock basically just takes a breather. It would probably trade sideways in a new, higher range as all the buyers and sellers duke it out and try to figure out what this thing is actually worth after such a massive move. And finally, we have the bearish path. In this scenario, that 321% spike was it. That was the peak. The excitement starts to fade, traders who got in low start to take their profits, and the price corrects, and corrects pretty sharply, falling back down towards those older support levels, well below $3. All right, so let's try and put all these pieces together and talk about the big takeaway. When you see a situation this extreme, what does it all really mean for someone watching from the sidelines?
Okay, so let's just recap the evidence. We have an absolutely extraordinary price surge on volume that is completely off the charts. The technical vitals show a trend that's incredibly strong, but also flashing major overbought warnings. It all points to one conclusion. This stock is in a highly speculative phase where the potential for a huge reward is married to an equally huge amount of risk.
And really, the final verdict from the analysis we're looking at is a clear and direct warning. The same forces that can make a stock skyrocket 300% in a day can also make it reverse just as violently. Extreme caution is absolutely the name of the game here.
And that leaves us all with the ultimate question, doesn't it? Is this a rocket ship that's just starting its journey, or was it a brilliant firework that's about to fade from the sky? The answer, most likely, will be revealed with the next big piece of news and how the market decides to react to it.